reduce.
Merci. Wisdom. You may watch with your sister. Okay.
Okay, good evening, everyone. Good evening. I welcome
Good evening,
each
sir.
and every one of you into today's class. So I would like to go one after the other to welcome everybody. I can see Abada Chukuka. You are welcome. I can see Ayo Ojekemi. You are welcome. I can see Nathaniel Nosike. You are welcome. Olakpade Roslin. You are welcome. Olushola Sholares. You are welcome. Oniwurola. You are welcome. Rachel Oludoyi. You are welcome. Ronke Salami. I can see Starry God. I can see Titi Lokbe Oladejo. You are welcome. So somebody can please drop a notification for people that are yet to join so that they can know that the class has started. So, but before we go straight into today's, I would like to ask if anybody has a question based on all the things we have discussed, you want to ask me quickly before we go into today's discussion. Then once it is, yes, 9, our class may be a little bit extended today, but I would like to take like 30 minutes break. Then I will come back. I really want us to finish it today. I don't want us to prolong this class beyond today. So we're going to start right away. If you have any question before I go straight, you can quickly ask me your question. Then we go straight into today's class. So if you have a question, any question you want to ask me, you can quickly bring it up so that before we dive straight ahead into what we have for today. Okay, so in the absence of no question, would like to go straight ahead. Please let me know if you can see my screen and if you can hear my voice audibly. Okay, so let's dive straight ahead. We stopped at page 70. This was where we stopped in our yesterday's class, and this was basically showing the summary of strategic recommendation, summary of strategic recommendations. And the strategic recommendation was basically saying that it said approve the phase implementation, start with service center. This is to basically say that the company, the client, Folak Moto, was proposing to go into a new line of business, and it's saying that they should do it in phases. So he was saying that do it in phases. You can start with service center and spare parts, and then before you now go into local assembly. So he said that this service center and part sales is going to be a short term, something they can start in the immediate now, and they can now, because local assembly is going to be more capital intensive. So secure strategic partnership with foreign companies that deals with original equipment manufacturer. So he is suggesting that they need to secure strategic partnership with foreign company that produces this original equipment, and also as well as fintechs. They need to collaborate with a fintech company for the assembling and for the digital financing. You see that it's because of digital financing. If you go online now, you will see people saying that you can borrow a loan. You don't need to physically appear. They say without collateral, you can borrow a loan, 100,000, 50,000. Some say that they can give you a loan as much as close to 300,000, 600,000. That they don't need your physical presence. They just say they have an app. Just log into the app, apply for the loan, then your account will be credited. You understand? So that is what a fintech can do. Before, if you need a loan, you need to go and queue in the bank. You need to fill a form. They will ask for your mother's name, your father's name, the address of your great grandmother, and all of that. They will ask for almost so, but all of that, fintech has eradicated all those things. So now, at the comfort of your home, you can download an app and request for a loan. And before you know it, your account gets credited. That's it. Establish centralized digital inventory and e-commerce system. Have you imagined now people go to Ladipo to buy spare parts? Some they will say, what about just the way you can go on Jumia, you can go on Konga, you can go on Gigi, you can go on Temu to other things? Will it not be good if we have a spare part, an e-commerce platform to buy spare parts where you can buy original spare parts? You understand? So that is what they are proposing, that they should look at that e-commerce system for transparency and customer engagement. Pursue NAIDP incentives. That is pioneer status. If they are going into assembling of, there is a pioneer status they will enjoy. Import duties rebate, they will enjoy it. Local manufacturing grants are there. There are grants for manufacturing companies they can tap into. Financial and risk management. Reduce leverage by refinancing long-term debt and injecting additional equity. So if they are going into this proposal, they may need to inject additional equity. They may need to leverage on refinancing the long term. Refinancing the long term means that if you have a long term, can you renegotiate the period of repayment? Can you renegotiate a lower rate of the long-term debt so that you can use part of the debt to finance this new proposal? Commission an independent external audit for 2023 because it is an unaudited report. So they are saying that why don't they get an independent external auditor to look at the 2023 and 2024 to validate the financial data? Because if they want to take additional loan from the bank, they will have to submit their audited financials to the bank. depending on the volume of amount that they need. But once they are corporate entity, the bank will need their audited accounts. They will need, sometimes they can ask for your 3 years audited account. So that's why the account needs to be audited. It's part of the financial and risk management. Implement cost control system and strengthen the credit management. So we also look at governance and ethical compliance. Adopt Ican ethics code and corporate governance structure. So of course they must adopt it because it is something that can stand against them if they don't have good corporate governance structure. Establish CSR and sustainability policy that aligns with IFRS. It's a requirement now. They check reports to make sure that every audited account, just like we check that audited account comply with international financial reporting. So that's the same way for every company now. You must show how you have complied with the sustainability policy. Invest in technical training and certification for mechanics, technicians, and service personnel so that you don't have non-entities handling your services, your motor repair for your customer. They will not go and damage customers' motor that it will cost you a lot of money. Make sure that your mechanic, your technicians, they are trained. They have required technical training and certification. Environmental and social responsibility. Implement a waste oil recycling, emission control, renewable power solution. Partner with SO, Standard Organization of Nigeria, to promote quality assurance and eliminate counterfeit parts. We have the report on financial data, missing industrial benchmark, incomplete market data, assumed growth projection, currency and policy violation. So these are the things. Then in overall, given the findings and assumption, Fola Motors is financially stable but strategically under-optimized. They are strategically under-optimized. So what are your advice to the board? Board is advised to approve the diversification, prioritizing service center and spare parts as immediate entry. They should start with service center. You know, imagine somebody buy a motor from you and you help them service the motor. You give them warranty that if you buy a motor from us, we help you service it for the next 6 months. Whether it's a new vehicle or it's a Tokumbo one, that one can make a customer to come and buy from you. Pursue assembling and digital transformation project under a joint venture or a phased model. Enforce governance and audit reform to restore confidence and attract investors. So don't forget that this aspect we started with what? Looking at the executive summary. That's where we started. We're looking at the executive summary. This is page 2 of your report. All the things we have been saying, this is page 2, executive summary. Don't forget that we said that your executive summary should not be more than 1.5 page. 1.5 pages. Maximum of 2 pages. Maximum of 2 pages. This point that we raised here is to give you an idea, enormous idea of things that you can talk about. There are some information here they are not going to change in the exam. You are going to have some information the way you are seeing it now. That's the way you will have it in the exam. For some of the information, it will just change, maybe by additional information that will be provided. But this is giving you a guide as to, okay, this is where I should structure my executive summary. Don't forget, we said that executive summary is an integral part of the report. It carried almost 25 marks, almost about 25 marks of the report. Inability to write a good executive summary means a reference in that paper. That is why you must, one of your priority and objective is to write a good executive summary. That's why we are bringing out all these points, showing you how you can structure your executive summary, method of analysis, looking at how you bring out your key assumption. There are some key assumptions, as you are seeing it here, it's not going to change in the exam. Reservation and professional skepticism, and other things, key findings, things you can discuss under your key findings. That is what this aspect, all this story we are talking about, that is what it's about. Things that you can talk about. You need to write what are the limitations of the report. Yes, you have written good one. What are the limitations? You may have 5 points here. You don't need to write the entire 5 points in the exam. If it is 3, you can remember, or 4, give it to them.
Hello, Mr. Taiwo.
Hello, can you hear me?
Yes, sir. Please, sir. At the end of that executive summary, you wrote prepared by Strategy and Financial Advisory Unit, Folak Motor Nigeria Limited. Is it the Folak Motor Nigeria Limited preparing this thing, or the auditing firm, or the chartered accountant rather?
Okay, thank you for that question. It is the strategy and finance advisory of this company that is preparing this report. So if I'm the finance director, I've engaged you. It depends on what the board wants. The board may not want you, the auditor, to come and do the presentation. They may say, oh, let our finance director, let him come and present to the board. But we approve that, give it to this consulting firm to come and present. So this relationship is between the finance or the MD asking the firm to prepare the report for them so that they know what to discuss in the board meeting. It doesn't mean that this thing. So if I put this, you may prepare a report and I'm the one that will repackage the report and present it to the board. Are you getting it?
Yes, sir.
Is that point clear? So it depends. Yeah. But
hello, sir. Hello, sir.
Yes, right.
So this one you are saying, the first page, you write the overview of the report. Are we going to write the same thing in the exam before we start? We first of all write the overview of the report, the table of the content, and all what you have. We're going to write that one first before we go to executive summary. That is not more than 1 page, 1 or 2 pages rather.
Thank you very much. Don't forget that you cannot merge executive summary start on a fresh page.
I know,
you
yes.
Don't add anything. Cover page will start on a 1 page on its own. Nothing should be added with it. Table of contents should be on a separate page.
Okay.
Nothing should be. It is wise for you to have table of content. It shows the orderliness of what you're about to write. It even help you when you are writing. You know that, oh, after the cover page, I'm going to write executive summary. It makes your work to be orderly. You know the order you want to write those things. And you can even label the pages to know that, okay, page 2, page 3, this is what I should be writing there. Okay. Because there are marks for that thing. There are marks when your work is orderly. And because make your thoughts to be articulate, to follow the way it's supposed to follow. And that is why we deliberately do this. This is the order your report. There is a template that is given in Ican study pack, the way your report should be organized. And that is what we have adopted in this report.
Okay. Thank you, sir. The second thing, sir, after the executive report, I'm going to introduction to the report. Am I still going to put the address, or I will just leave it like that and continue with introduction? Because
are you going to put what?
the next thing under my covered page is introduction to the report. So based on the introduction, am I going to do it in the way that I'm going to introduce the executive? You know, they're going to give us the name of those executives in the unseen. Am I going to put it on under my introduction before I start the requirement 1, requirement 2?
I'm
No.
still struggling to get the point you are trying to make.
What I'm trying to raise is that under my table of contents, after executive
Yes.
summary is introduction to the report. Under the introduction to the report, you know, they are then going to give us the unseen. I'm going to see it in the exam. She understand?
Yes.
When I see it in the exam, under my introduction of the report, on that scene, they will give me the name of those people, the board of directors, the executive management.
They will give
Am I
you
going
in
to
the
have
exam,
it?
correct?
Yes.
They will give you
Am I going to be part of my introduction?
No,
Yes.
no, no, no,
Is
no,
it going
you
to
don't
part
need
of
to.
my introduction? Okay.
No, 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 no.
All
It's
right.
not. No, no, no. It will not.
Okay.
No.
Okay.
No,
Okay.
no, you don't need to put it as part of your introduction. No.
Okay. So the introduction will start on the requirement 1. Hello, sir. Is my introduction going to start with requirement 1 and requirement 2? What they are going to ask me to do? You know, in requirement 1, they will ask me on the. Okay, I want to know.
Okay, thank you. Thank you. I'm going to read something. Thank you very much for that question. Thank you very much. I want others to learn. I will read out something. He said this introduction. This should include explanation of the reason and justification for the analysis together with the focus of your report. I take it again. Your introduction should include explanation of the reasons and justification for the analysis together with the focus of the report. Specifically, your introduction should cover terms of reference, aim, objective of the report. Terms of reference, aim, objective of, you know that in table of let me continue. You have shown the table of content. So I'm reading out what is it that you should mention, you should discuss under the introduction.
Yes.
After you have finished executive summary, what should I write under introduction? What are the things that should feature under introduction?
Introduction, yes.
Introduction should include explanation of reason and justification for your analysis, and together with the focus of the report. Now, he said your introduction must include terms of reference, aim and objective of the report, the scope, and the limitation of the report. So, what this thing is saying is that just limit your introduction in discussing what is the reason and justification for your analysis. For example, let me give for example. In your introduction, you are just simply saying that you know the reason why you are, you want to ascertain the financial health. And from the financial end, you want to use it to justify whether the company will be able to do the 2 proposals. Whether they will be able, you want to advise that, oh, whether these 2 proposals should be done. So you mention the 2 proposals, they will mention it. It will be given to you on scene. And I want to show you something. Let me show you the place. If you look at this place we just finished, let me go back to page 70. Page 70.
Yes.
Now, if you look at this towards end, look at it. We did something here. Look at it. We say over, this is what now. We say, given the finding and assumption, Folak Motor Nigeria Limited is financially viable. That is in your, because you have looked at it, you have done your calculation. This thing I'm doing is example of the concluding executive summary. Concluding part of your executive summary.
Yes.
You understand? So this is the concluding part of the executive summary. You say, given the finding and the assumption you have mentioned, Folak Motor Nigeria Limited is financially able. But
Yes.
you know that they did not stop there, but strategically under optimize. You cannot just say, do you understand? You cannot just say, hey, they should just go ahead with the project. Remember, that is where professional skepticism, that is where it comes in. You don't just say the project is viable. You will say the project is viable. However, they should consider other factors that may alter. So you have not said it is, you have put it forward before management to now choose. You don't just categorically say, oh no, they should just go ahead. That's what this thing is technically saying. So it's saying that yes, financially, from what the figures are showing, the company is financially viable, but strategically under optimized. You know, the appropriate diversification, they should the board should approve diversification, and when they are approving the diversification, they should prioritize service center and spare parts as immediate entry. Pursue plans and digital transformation under a joint venture. They should depend with to be intensive, or they should do it in phases. They should do it in phases. Phase 1, this is what they want to achieve. Phase 2, this is what they want to. Maybe they want to get the land. They want to go and partner with the company outside Nigeria that will be giving them equipment and this thing. They should put it in phases, or they should look for a company that is already into that kidney and collaborate with them. That's joint venture.
Okay.
Number 3, say enforce governance and audit reform. So, going back to your question, please, no waste time too much under introduction. The introduction is like a preamble. You understand?
Okay.
Just a preamble. And that's why it specifically told us what are the things that you should mention under your introduction immediately after your executive summary. Yes. So it is okay that on page 3, immediately when you have finished, let's say you have left space for your executive summary. You know that my executive summary should not be more than 2 pages. Because if you are not careful, if you want to override, you will go and be writing the thing you will still write in the report inside the executive summary. And it's supposed to be executive summary, supposed to be summary of what you are going to write.
Okay.
You get it? So under introduction, you said that your introduction should just the explanation of the reason why, of the reason for the report and the justification for your analysis.
It's okay.
That is it. So let's just keep it as short as that, because truly, it's not that introduction carries 1 mark. But introduction you only do be 1 hour, 1 mark or half mark law.
Okay.
So what is important is to state your key findings, your conclusion, your recommendation. Those 2 are the key things. So when you are writing, don't try to write over too much under introduction. Just this the purpose of this report is da. Do you understand? So don't worry, we are going to see an example. Let's continue. But thank you for that question. That was a good question.
Right. Yes.
So we have seen things that we can talk about. Oh, where was I? What is okay? So yes, so we are done. This is it. So next thing is, they have told us this is appendix 4. This is how you will label your appendix. So yes. So this is how. Now, because of something they have mentioned, that's why we are looking at appendix. Now, this is a SWOT analysis. You are carrying out, because let me tell you something. If they have said that you want to go into an industry, and that industry is a subsector of automobile industry, and that industry is motor repair, service center, and selling of spare parts. If they told you that there are opportunity in the industry, what do you need to take? What do you need? What do you need to be able to position yourself to take advantage of the opportunity? What do you need? Is your strength. is your strength? What do you have that you can use to take advantage of those opportunities? That is where SWOT analysis comes in. Hello, do you understand? So that's why we are looking at SWOT analysis.
Hello, sir.
Hello.
Hello. Please, can you explain again? I didn't get that part.
Okay.
Please. Thank you.
Okay, so what I said before was that if they told us, let me refer you back to page 13. Page 13. If you look at it, that is exhibit 4. Exhibit 4. Let me go there. This is exhibit 4. Look at it. They gave us introduction to the industry. Motor repair service center spare parts in Nigeria. They gave us introduction. They gave us overview of the automotive after sales market in Nigeria. They talk about motor repairs. They talk about service center spare parts sales. They now come. They now told us, look at it. They told us key challenges. They told us opportunities. They now told us future outlook. After they gave us future outlook, look at this statement. They say new entrance into the motor repair service center spare parts could potentially be companies that buy and sell new and used vehicles, such as Folak Motors. What does it mean? They are telling us that the Folak Motors, such as Folak Motor, that Folak Motor can be assumed to be a new entrance into this market. Meanwhile, Folak Motor, one of the things they major on presently is the buying and selling of new and used vehicles. Are you getting it? So if they told us in this part, they now gave us opportunity. They gave us challenges. What is next is to look at SWOT, carry out SWOT analysis now, to be able to know what is it, what are the good things that Folak Motor have that they can use to take advantage of these opportunities. That is why we are looking at SWOT analysis. That's why we are looking at it. Based on all this information, they told us that, oh, they told us all of this. So we move on. Go back to page 70. Yes, this is where we are. So we are looking at SWOT analysis. What is the objective of our SWOT analysis? To evaluate Folak internal strength and weakness and the external opportunity and threats in its current and future business environment. Take note, the objective is that this company is in an industry. For you to thrive in the industry, you must be able to analyze what are the threats, what are the opportunities in the industry that you are operating or in the industry you are trying to go into. Guide strategic decision making for diversification into vehicle manufacturing, digital vehicle sales, financing platform, and after sales expansion. Support the board in determining viability, sustainability, and competitive direction of the company So this is the objective of why we are calculating SWOT analysis. Let's go into the SWOT analysis. What are the strengths? What are the strengths? Number one, strong market reputation. We are told that one of Nigeria's foremost indigenous automobile dealer is Folak Motor. They are trusted, they are trusted by their customer, both new and in both new and used vehicle. This is one of the strengths. You need this information to be able to take advantage of opportunity. Established customer base. They have an established customer base. Number three, wide distribution network. They have wide distribution network. We are told that they presence across major cities, offering goods, logistics, and customer reach. That is where we coined that word out. Established, they have a wide distribution network. That is how we coin it out. Another thing is that industry experience. They say that they have deep knowledge of Nigerian automobile. It means that they have industry experience. That is a strength. Strategic relationship. They say they have good rapport with importers, banks, and logistic providers. So that is a strategic relationship. That is a strength. Growing asset base. They have a growing asset base. What are the weaknesses? High leverage. The company is highly geared. The gearing ratio is in 5:1, which indicates over dependence on debt financing. And this is where they are saying, this is where they are telling that you should determine. Look at it. This is, we are in page 73. Look at it. That is what they told us here. That, look at it here. They said that carry out analysis of the financial statement. Your role as Sylvester, your role include analyzing client financial to identify area of weakness. Upon identifying these anomalies, develop and recommend likely solution aimed to correct deficiency. That's not where I'm going. That's not where I'm looking for. Okay, this is where I'm looking for. This is where I'm looking for. Where they mention, look at it this page. They say consider the impact of this proposal on its business and financial risk. When a company is geared or when a company is highly geared, it means they have financial risk. We are all students of strategic financial management. We know when they say company is having financial risk, they have financial. How do I put it? We call it financial vulnerability. And how do we define financial risk? Any company that they have debt capital in their capital structure, that company already has a financial risk. They have debt capital, whether it is debenture, whether it's preference shares, whether it's bank overdrafts. Once they have debt capital in their capital structure, it means the company has a financial risk. So this is part of the thing they want you to determine. This company, do they have financial risk? So this company that is already highly geared, you cannot advise them to go and take additional loan, except if they want to take additional loan, except the project is going to be self-financing. Except if the project will be self-financing, that the taking additional loan will not complicate them. But there's no way that taking additional loan will not complicate their financial risk. So they have to look elsewhere to be able to finance this project. So you have to look at the two proposals. Are they mutually exclusive? Are they mutually inclusive or they are mutually exclusive? 2023. At the weakness, high declining profitability. The company has a declining profitability. They made a profit in 2023, 2024, they made a loss. The report they will give us for 2025, we don't know whether they will make a loss again. Limited local production capacity. They have a limited local production capacity. They don't have manual operations. They have manual operation. That is, their system is not digital. They run everything manually. Weak receivable management. They have a weak receivable management. Prolonged collection period, which have impact on their liquidity. How do I know that they have a weak receivable management? Let's go back to Exhibit 5. Look at it. Look at Exhibit 5. Look at 2004. Look at trade and other receivable. 620 million. It has increased to 665 million. Look at the cash and cash equivalent. It was 248 here. It is 229 here. Meanwhile, inventory has reduced. Look at inventory, 156.5 million. Here it is 149.5. Inventory has reduced. So these are the things you look at. $74. So we look at the weakness. We look at the weaknesses. The weaknesses internal. We go straight. Part of the weakness is weak receivable management, insufficient research and development and technical expertise. It is still part of the weakness. Insufficient research and development and technical expertise. Then we look at the opportunities. What are the opportunities? Those ones are mentioned in the body of the case study. Government policy shift, rising vehicle demand, digital transformation, hybrid electric and automotive fuel vehicle, after sales market expansion, training and certification, strategic partnership. These are the opportunities that are open to them. Seven of them. Let's look at the threats. What are the threats? Currency volatility and inflation. Policy uncertainty. Competition. Counterfeit spare parts. Infrastructure deficient. Poor road network. Unreliable electricity affects the operation. Consumer financing constraint. These are the threats. These are the threats. These are the threats.
Excuse me, sir.
Yes, go ahead.
Like this competition, in one of the exhibits, they mentioned that there is no barrier to entry, and that most of the people, they are involved in informal. So there is no standard. So how is there a competition?
Thank you very much. if they say that there is no barrier in entry, that alone is a concern, because anybody can enter the market tomorrow and try to mess up whatever you are putting up. So the fact that one thing I want us to establish is that there is no business that you want to do that you are the only one doing it. There is no business you are thinking about to do that you are the only one thinking about it. There is no business. So even if there is no competition now, does not mean competition will not spring up. This is the information we have now based on the pre-seen. We don't know what they will now mention in the unseen. But there is no business, there is no industry that there is no competition. There is always a competition. Don't forget that one of the features of a perfect market, we did it in SFM. One of the features of a perfect market, was it SFM or in economics? One of the features is that there is no barrier to entry and exit. It means that customer, buyers and sellers, they have the knowledge of the price. Imperfect market is monopoly. You are the only one dictating. You are the only one determining the price. So there is no business that there is no competition. The fact that they have not mentioned competition in the pre-seen does not mean they will not mention competition in the unseen. And there is no business that do not have competition. The fact that you are thinking about it, someone else is also thinking about it. It is the person that started first that will be able to jello. I don't know if I've answered your question.
Yes, sir.
Entries
Thank
of
you,
global brand. You're welcome. Entries of global brand with superior technology. Entry of global brand. You are doing something locally. A global brand can come from America or US. From America or UK to come and surpass what you are doing. Entries of global brand with superior technology. Look at OPay, Kuda Bank. Before, you need all the documentation in this world to open a bank account. With OPay, they just need your phone number, you have account. When you go to normal commercial bank, they will say, bring your father's name, bring your mother's name, bring your great-grandmother's this thing, bring your certificate of birth, bring your certificate of this. But OPay say, don't worry, come to us. We are new generation fintech company. With your phone number, you have an account. Look at Money Point. Before, banks are struggling. With Money Point, you transfer, somebody gets receipt immediately. As you are sending it, the person is getting it. Look at PalmPay, OPay. Look at all of them as they are stringing up. That is what you are saying.
How are you? Hello. Pauli.
We are looking at limitation of SWOT analysis.
Hello.
So, as good as a SWOT analysis, are you talking to us?
Please mute your mic if you are not speaking.
Okay. So these are the limitations of the SWOT. He said why SWOT is valuable for strategic planning. It has an inherent limitation. This is just for knowledge sake. Just know that there is limitation to SWOT analysis. I'm not going to dwell so much on it. Strategic action that Folak motto to capitalize on the opportunity. Look at it. What are the strategic action that Folak motto they need to use to capitalize on the opportunities? These are the strategic action they need to take. Number one, local manufacturing and assembly. Policy-driven opportunity. This is a policy-driven opportunity. They need a policy to drive this, and that policy must come from the government. So, number one, they need to leverage on this Nigerian AID. What do they call their name, self? Development. I want to remember their full name now. I think I saw it in one of this thing. Yes, Nigerian Automotive Industry Development Plan. So they need to what? Leverage. And they are saying that they need to apply for pioneer status incentives, strategic partnership. They need to form a joint venture with established global automaker, e.g. Toyota, Geely, BYD, for technology transfer. And as those, you see, some people will just think because I see somebody doing this business, you want to jump into it. Hello, you must first of all go and learn how they do that business. They call it strategic partnership. Develop a modular assembly plant. Where are you going to be assembling the truck? Develop a modular assembling plant. Begin with semi-knocked down semi-knocked down units before scaling to complete knockdown manufacturing for cost efficiency. For cost efficiency, this is a good one. What strategic action that Folak need to take? They've already given you the opportunity, so they will be expecting you the exam. Tell us the strategic action that must be that the company that your client should take to be able to take advantage of. Because opportunity may be there. If you don't know the action to take, you will not be able to take advantage of the opportunity. So these are the three things. Number two is digital transformation and online sales platform. Under digital transformation, what are the things that you need to do? They need to launch e-commerce vehicle marketplace. They need to adopt data analytics and CRM, customer relation management system. Digital financing partnership. C, look at C. They need to establish certified service center nationwide. Certified service center nationwide. Introduce maintenance subscription plans. Introduce maintenance subscription plan. These are the strategic action that must be taken for them to be able to take advantage of those opportunities that are mentioned in the precinct. Local competence, local component manufacturing. D, skills development and vocational training. Academy. to set up Folak Technical Academy to develop a training institute to certify all technician and engineer that align with SOS and NAPTEC standard. Public and private collaboration. They need to partner with Industrial Training Fund, ITF, and National Automotive Design and Development Council, NAD, to assess grant for the training program. As sustainable and green mobility initiative. Sustainable and green mobility initiative. They need to invest in hybrid and electric vehicle infrastructure. They need to pilot electric vehicle charging station in a major city, collaborate with distribution companies for a green energy solution, promote environmental compliance, that is, adopt a circular economy practices such as recycling batteries and tires to qualify for green tax. And the way forward, summarize all those strategic actions. This is to summarize after sales. This is the strategic direction. This is expected impact of that direction. If you take this action, if you go this direction, this is the impact you are going to have. If you go this direction, this is the impact you are going to have. For example, if they human capital, if they embark in training and certification, the impact of it is that it will improve the standard and the reputation. If they establish modular, then that will reduce import costs and create opportunity. That is that for SWOT analysis. Move to the next one, which is financial performance analysis. Financial performance analysis. So we don't waste too much time. Interpretation of the performer, we know gross profit margin, net profit margin, with the formula, net income or revenue, return on assets. We all know that the ratio you are going to compute is based on the information you are giving. The ratio that you are going to compute is based on the information you are giving. So when you are computing operating that margin, income over revenue, this is the percentage. What it means, operating efficiency is head cost. Analysis probability in 2020 years to take and other losses. Let me say something here. This analysis is saying that when you are interpreting your ratio, don't just say, oh, the sales grow in 2024 by 12%. You must be able to say what are the things that made the sales to grow. That's what they are telling us here. What are the things, what are the factors, what are the indicators that contributed to the growth? Look at this page. They say profitability weakened sharply in 2024 due to, that is what I'm saying. When you say profit increase, why did it increase? When you say profit decrease, why did it decrease? Don't just say profit decrease and stop there. Tell us why. What are the things that you have seen in the case study that made the profit to decrease? So we say that profit weakened. This is a more polished way to say decrease in profitability. So instead of saying profitability decreased by so percentage, they say profitability weakened sharply in 2024 due to declining sales growth. Because you already know the ratios that the parameter you use to compute those ratios. So all you need to do is to look at it and say, oh, if looking at it, this is page 79. Look at it. Look at it. Look at it. Revenue in this is 1.7 billion. Here it is 1.8. So you are comparing the difference between 2024, 2023. You are looking at it, okay, what are the factors that contributed to it? If total income, what is the figure that was high? These are the parameters that make up those figures. So you are comparing it. But this is revenue. Look at profitability. Although we know that this profitability they report here is not correct. But it was a loss. That's why we say that profitability decreased sharply. So we are talking about not revenue now, but profitability. The revenue increased in 2024, but the profitability decreased sharply. It turned from positive to negative in 2024. So that is how to interpret your ratio. Operational margin below industrial benchmark. Look at liquidity, current asset, current ratio, current asset all over current liability. Look at it. They are computing it. This is 1.2 to 1, 1.7. This is how you should be writing your answer for current ratio. Current ratio is always in ratio. Don't put it as percentage. Express it as a ratio. Quick ratio. Quick ratio is current asset minus inventory. You can calculate quick ratio because inventory figure was given in the question. So, and it is current asset minus inventory all over current liability. They say that this indicates tight short-term liquidity. In the exam, I would not recommend that you should compute 4. It will take your time. Maximum 3 ratio per each category. If you are computing profitability, don't do more than 2 or 3. Maximum of 3. Some people, they will go and be computing almost 5. Any ratio you compute and you did not interpret, it will not attract mark at the professional level. Because what attracts more mark is the interpretation of the ratio and your ability to tell us what does those ratio, what does it mean? What should management do about it? Don't just compute ratio and think that all we want to see is ratio. No, you can do that at a foundation level. We will pardon you, not at a professional level. So when we are talking about liquidity ratio, don't do more than maximum 3, because you need to interpret all the ratio. You must tell us what it means. So this is quick ratio, this is cash ratio. I did all of this for the purpose of explanation in the class. This is trade receivable turnover in days. Receivables all over revenue. Liquidity is stable but tightening. Receivable collection efficiency is weak. Receivable collection efficiency is weak. 131 days is far above ideal. This is it now. This is the 131 days. This is the 131 days. And the ideal date is supposed to be between 45 to 60 days. Between 45 to 60 days. If people hold your money for 131 days, it means that you are the one financing their business. Are they going to pay you interest on it? Next important ratio is called financial strength. You want to know the financial strength of the company because they are about going into big projects. So we want to know their financial strength. And financial strength is the same thing as solvency ratio. This financial strength, you will need it in the exam. You must compute the financial strength. It is part of the requirement. We are in page 80. Look at it. Look at it. Look at it. Analysis of financial statement. Your role includes analyzing the client financial statement to identify area of weakness. Upon identifying this anomaly, develop and recommend likely solution aimed at correcting deficiency and improving financial health. Improving financial health. So you are going to see those recommendations now. What should be done? That's why you cannot afford to compute too much ratio. So we're in 80. Go back to 80. So financial strength, that means you are talking about debt to equity ratio. What is the percentage of debt to equity? That is total liability all over total equity. They say very high. There is a very high leverage, excessive reliance on debt funding. Look at debt ratio. Debt ratio is total liability all over total asset. One of the things in ratio, you must master the formula. The moment you get the formula wrong, the recommendation will be wrong. Once a doctor diagnoses a patient wrongly, the prescription will be wrong. Somebody that is HIV, that the person has HIV, he will give it wrong. Once the solution will be wrong, the interpretation will be wrong. You must make sure, know the formula for debt to equity, know the figure you are picking as your numerator, and know the figure you are picking as your denominator. That one, you must get it clear before you enter the exam. Debt ratio is
Your line is breaking. Oh, we can't hear you. Hello, sir. We can't hear you.
Let's be patient, please. It's possible he got a call on his phone. I'll try to
All
reach
right.
out to him personally.
Okay. Thank you.
Okay, please try to exercise patience. He's trying to change his network. Thank you.
Hello, can you hear me now? Can you hear me now?
Clearly,
Can you
sir.
hear me now?
Clearly, sir.
Yes, sir. Yes, sir.
Yes, I've
Yes,
changed
sir.
my
We can hear
network.
you now.
My network was fluctuating. I've changed it. I've changed my network. So I was saying that look at their debt ratio, that one of the things you must get right, you must get your formula right. You must know what to use as your numerator and what to use as your denominator. Because once the diagnosis is wrong, prescription will be wrong. Once the formula you use is wrong, the result will be wrong. That's why we are showing the formula beside. And normally in the exam, as you are writing, you are calculating this thing. You must put the formula. You must write it out. So if I'm using net profit or net income all over revenue, write it out, that net income over revenue, before you pick the figure. Don't just say, oh, I'm calculating rows. You just put the figure in front and you are going. No. Write the formula so that the examiner can understand the figure you are picking from this one to this one. Yes, they have the marking scheme, but it's good to write your formula. It even guide you so that you not go and be picking wrong figure. It will guide you. You know that, oh, it is net profit I'm looking for all over my turnover. And it is the name they call it in the question paper. That's the name you should use. If they call it revenue in the question paper, don't get to the exam. You go and call it turnover. Something that is not in the question. So in this question, they call it revenue. Use revenue. Don't go and use turnover. This one, they didn't call it net profit. They call it net income. Use net income. Don't use net profit. Don't use profit after tax. Some people, they are writing formula. They leave what is in the paper. They are writing profit after tax all over shareholders. Shareholders skinny. And it's not in this thing. So one should try avoid not to create confusion for him or herself. Use what they use in the question. That is why we say don't calculate too many ratio. Calculate little one that you can quickly interpret. Calculate little one that you have already studied, you already mastered them very well. You know this is what I'm looking for. After all, they've given you exhibit 5. You already know some of this figure will not change in the exam. You already know the figure you will put together. You already know the result it will give you. Some of this table they've given us, they will only add information to it, not that they will change the figure. So there are certain things that you already know before you enter the exam hall. Folak, look at the interpretation. Folak motto is over leverage. Debt is greater times 5 than equity. Debt is times 5 greater than equity. Financial sustainability depends on refinancing or profit growth. You are saying that for them to...
Excuse me, sir.
Yes?
In that net profit margin, you use the benefit from income, that is 362 for year 23. I was thinking is 43,290. Or is it the one we are supposed to use?
Wait, 1 minute. I'm coming. I want to do something. I want to call up my calculation. One minute, please. Can you see my screen? Can you see my screen?
Yes, sir.
So ask your
Yes,
question
sir.
now. This is my screen. This is my calculation. This is the correct calculation I wanted to show you. This is it. This is the income before income tax is 9750. The net income for 2024 is 3640 negative. This is it. This is the calculation. The calculation you are seeing in that report, this is the Excel. This is the Excel. I first did it on Excel before I brought it to that report. This is the Excel. This, I make sure I first of all add up the figure, that the summations are correct, so that when we are picking our figure, we are not picking wrong figure. So I check the total, all the total, that the totals are correct.
Some particular with 36 negative 3640. From your calculation there, is under benefit.
1 minute to 36 what? 40.
3640.
Okay, let me check what you are saying.
Under net income. That's not
net,
what's in your...
Under net profit margin.
Yes.
net
Margin.
Net profit margin. What you use is
Margin.
3640. But what I'm seeing, what is in your calculation is 43290.
Okay, that is how it's supposed to be.
net return on assets. Net profit margin.
Yes.
Okay. Can you let me share? Let me stop the Excel. Let me stop the Excel. Stop and share. Can you see my screen now?
Yes, yes.
So if you look at gross profit, you can see that we didn't calculate anything for 2024 because we had revenue minus cost. So we are calculating gross profit margin. There was no profit, so nothing was calculated for 2024.
We are not talking of growth. We are net profit margin is what we are into. Net profit margin. The figure there is not correct. Net profit margin, not
This
gross
is net
profit.
profit. It's showing minus 3640.
Yes.
Is that not what is under 2024?
No, sir.
2023, no, sir.
2024.
No, sir.
No.
No,
2023,
what it says 58,940. So
58,940 and 23, 43,290.
and you
Okay,
know
so this is revenue. So they are using minus 3640. I'm coming. Then 1 minute. Oh, see you. This net profit here, this one, if you can see my cursor, this is for 2024. Oh. This, if you see the revenue they use, look at your paper. They use revenue for 2024, and the net loss, the net profit was minus. That's why it is 3640 all over 1849. This is for 2024. That's why they call it a loss. They said that negative margin shows loss in 2024. This is for 2024. This one is for 2024. That's why the category say net negative margin shows loss in 2024. And the revenue they used together with it was revenue for 2024. They didn't mix it up. But I get what you're saying.
There is a mix up
This is
there.
for
Sir, this thing is
2024.
Can you
confusing.
explain to us how you
It's
got this
confusing, no?
3640?
It's
1
confusing.
minute.
Explain to us how you got the negative, how you arrived at negative 360.
How do you arrive at
How
this
it
Yes.
became,
Oh,
how did it become the
okay.
net profit?
I understand you. I will show you now. Let me go back to the Excel. You will see it clearly in the Excel. Let me go back to the Excel. When we started yesterday, that was where I said that I want you to help me press your calculator. I want us to be on the same page. So this is my Excel. Now look at it. I want you to pick your calculator. Let me so that we can be on the same page. So use your calculator, look at it. If you look at it, now this 1584,340 plus 213,390, it will give you 179,730. So it is this 1797 minus 1849, it will give you this 52. Can anybody confirm that? Can anybody confirm that 52,190? That was where we started yesterday. I wanted you to confirm it.
You are correct.
Okay. Now, the next thing is interest expenses. It's an expense, it's supposed to be in bracket. If the figures that are positive, they are not in bracket. It is the figure that they are outflow that's supposed to be in bracket. That's why. So look at it now. Interest expenses was put in bracket. That's why when we did for 2024, I said the same method we use for 2024, let's use it for 2023, so that because of course we have to use this like with like. So the interest expense support is in minus, so we say minus. So if you take 11,150
Yes.
plus 31,290,
Yes. Minus 52,190 give us 9750.
Did you see
You
it
said,
now?
and they wrote 72330.
It's wrong.
It's wrong, yes.
So if you use the same method for 2023 by picking 13020 plus 1890, you now minus it from 54,580. You will see the figure it will give you.
Okay. Negative 3640. Yes.
Noted, sir.
You seen it
Noted,
now?
yes.
Yes, that is
Yes.
how we
Yes.
got that figure. It was a net
Okay.
loss.
Yes. Net loss, yes.
You understand? So we can't assume that figure to be gain. If we assume 2024 to be gain, we have to assume that the figure in bracket in 2023 to they are gain. So it means we have to add it back. If we add it back, you will not get 39,670. So it is when you subtract it from 54,580, that's when it give you 39,670. So that's how we got that figure.
Okay, sir. So what
Thank you very
we
much.
actually calculated. Excuse me, sir.
Yes.
So what we are actually using is 2024. The net profit we have in the appendix. We are not comparing. We are only doing for 2024.
Yes.
Am I correct?
Yes, correct. You are only doing for 2020. We are not comparing yet.
Okay.
You understand?
Okay.
We are not comparing. And it will be look somehow to compare. I didn't mean their profit. It will be easier to compare. Something made loss. It will, once that your numerator is negative, to begin to compare it, it looks somehow. You understand? So it's easier if they are both net profit, you are comparing. So that's it. So that's clear.
Okay. Sorry, sir. So in the exam, are we supposed to correct the financial?
My sister,
We are.
Don't
you want
correct
to use
You
anything.
mentioned
Hey.
because from there, like you said if they say net income, we should use net income. We should use
yes.
it the way it is in the distance. Now,
Okay.
if we use, if we, and this exam, we are not going to do it in the exam. So if we use this correct one that is negative 3, it won't it look like we are importing figure because it's not in our statements.
Sincerely, I agree with you, my sister. If your faith carry it that you should use 72,330, please go ahead. It depends on your faith. Please go ahead. If your faith carry it that you know that this figure, the mathematical addition is not correct. If you want to go ahead with it, please go ahead.
So that here, it's not faith matter here. So what?
It is a reality. It is a reality.
My
Because when you
sister,
see
if your faith carry it that I know that this figure is
that's
wrong.
the purpose of giving you prison.
So but sir, if assuming we have the time, can we quickly decide
Let me
the calculation
ask you
so
a
that they will
question.
see how I
My
arrive at
sister,
it?
let me ask you a question, Gift. Normally, as an accountant, if you are given a figure, are you supposed to test the arithmetic accuracy or not?
I'm
supposed to test it.
Thank you very much. So if you want to pay somebody money, somebody give you an invoice, you now discover the addition on the invoice is wrong. You now go ahead and overpay the person.
Okay.
That's why I say if your faith carry it that knowing that this addition is wrong, you want to go ahead and use a wrong figure, please go ahead.
Can I show them? Can I show them that it's wrong?
Why
and then
not?
I'm
You can
using the
show
right
them
one?
now. Why not?
Okay.
You can show them. So you think that the examiner will not later discover this thing?
Yes, they will.
Because you
That's
can
the
get to
purpose
the
of
exam,
this.
they will have corrected this place. By the time you
Yes,
get to
so
the exam, maybe that they may not correct it. They may not even have noticed it. So that's why I say if your faith carry it, that knowing that this addition is wrong, you want to go ahead and use a wrong figure, please, to your Israel, to your tent, oh Israel. So that's the
Excuse,
that's
sir, I
what I
need a
would say.
clarification.
Yes, go ahead, Ezekiel.
If you look at all the ratios, calculation was made for 2023 and 2024, except
Yes,
for the profitability ratio, where only that of 2024 was computed. Are we
yes.
still supposed to do it the same way in the exam? Or we are to compute that of 2023 and 2024 in the profitability ratio?
No, please come again. Let me get your question. I didn't get it.
The profitability ratio, liquidity ratio, and the rest.
Yes.
You did computation for 2023 and 2024,
Yes.
except for that of profitability ratio. Only that
Yes.
of 2024 was computed.
Okay.
Are we to follow the same pattern
No.
in the exam?
Please, in the exam, compute for as many years you are given. If they most likely in the exam, they will add at least one additional year. It won't be only 2 years. At least they will likely add one additional year, at least at the minimum, at the least. So you need to compute side by side 2023, 2024, whether the figure is negative or not. Compute it, use your calculator, put the result there. So this exercise is just to guide you to know this is the interpretation. You have an idea.
Okay. So, thank you.
You understand? And you see one good thing about it, that once you have an idea of something, to get the right result is not difficult because you already know where you are heading to. You know the figure you are picking together with what figure. It's different from the one that you are just seeing it for the first time in the exam.
Thank you, sir.
So that's it. So let's continue. So these are the ratios. These are the financial strength. This is 2024, 2023 efficiency ratio. These are the efficiency ratio, inventory turnover, asset turnover, payable turnover, working capital turnover. So for operational efficiency, it is satisfactory. However, asset productivity and receivable collection need urgent improvement. Needs urgent improvement. So this efficiency ratio, working capital turnover, payable turnover, asset turnover, these are all the turnover of this world. These are the gearing ratio. Gearing ratio, we are computing equity ratio, capital gearing ratio, interest burden ratio, leverage multiplier. This is just to widen our scope of the ratios we can compute. Then this is the analysis of the weaknesses and anomalies in the ratio. This is the analysis of the weaknesses in the financial figure. Number one, for profitability, there is declining margin and 2024 loss due to high cost and other losses. Strategic implication, there is profit erosion. Profit erosion threatens debt repayment capacity. The moment you are having profit erosion, you may not be able to meet up with your debt repayment. That's what it's saying. Liquidity, there is high receivable and there is low cash coverage. So whenever we make a sales, it's either the money is in the bank as cash or is seated in receivable. Is seated in receivable. So when we have high receivable and low cash coverage, the implication is that working capital stress. There is stress on the working capital. Cash flow is tightening. Cash flow is dwindling. Is tightening, is dwindling. Okay. Leverage. Debt equity ratio is greater, is ratio 5:1. This is unsustainable. What does it mean? There is financial, the senior brother of financial risk is what they call financial fragility. When they say an item is fragile, meaning that it's fragile, it can break at any time. If you don't undo it with care, it breaks. That is, it is the senior brother of financial risk. Financial risk is a softer English. When you say financial fragility, it means that, hey, there is fire on the mountain. That's what it means. So it is the senior brother of financial risk. Sensitivity to interest rate changes. They should be more sensitive to interest rate changes because they are now at financial fragility. Efficiency, poor receivable collection. There is a poor receivable collection. Their receivable collection is 131 days. That means, implication, this has increased their credit risk and cash flow pressure. Because receivable is increasing, receivable collection days is increasing. People are holding back to their money outside more than necessary. Next one is tax burden. Tax burden. Volatile tax position. This company is in a volatile tax position. Laws may reduce utility of allowance because they are having law. They may know it will reduce the possibility of utilizing their allowances. What is the implication? There is need for tax efficient structuring and planning. There is need for tax efficient. Can you see now? We are in page 83. Look at it. It is because of this thing that the ratio discover. That is why they make this statement. Strategic tax planning advice. Strategic tax planning advice. Provide advice on strategic tax planning, guiding the client towards approaches that will result in optimal tax liability and compliance with relevant regulation. That is why they made this statement that you are to keep abreast of development in accounting and taxation sector, as well as matter relating to business sustainability. 83. So you can see it now. There is tax burden, volatile tax position. So there is need for tax efficient structuring and planning. What are the what are going to be the yes?
Please,
Hello?
Sir, hello, sir. There is no conclusion on.
There is no conclusion on what?
Sir, this tax burden.
We have not concluded yet. We have not concluded yet.
Tax burden. We
Yes.
didn't calculate anything on it. So how do we learn how to draw an observation? Where do we get our observation from? Assuming there are
Okay.
changes,
Thank you. Thank you very much for that question. Now let me go to. Thank you very much for that question. I was expecting that question. That how do we even know that they have a volatile tax position? What are the things we have seen that make us come to conclusion that they are in a volatile tax position? Okay. Thank you for that question. I was expecting it. Okay, so exhibit 5. So I mentioned this yesterday. Now, hey, I need to charge my laptop. We want to die. So, number one thing I want you to pay attention to is that for me personally, looking at this question, the first question I was asking myself, what happened in 2023? Why are they having benefit from taxes? What happened? This is it, my understanding. Imagine that I want to ask a question. Do we all know what the way we use withholding tax credits, withholding tax credit notes? We know what it means, Abi. Hello? So, hello, can you hear me?
Yes,
We can
sir.
hear you clearly, sir.
Now, good. I want to believe that before you can have benefit, it's probably that people have deducted tax, or maybe you have done overpayment or something, that the provision you are not normally in a year, you are supposed to calculate your profit and calculate what your tax should be and make provision for tax. So if you have done it to the extent that you now discover that you have overpaid government, then there is a problem in the tax computation or whatever you are doing. That's one, there is a question mark there. But that is not my issue. My issue again, in 20, they make there was a provision of income taxes of 13.3 million. 13.3 million in 2024. 2024. Now, number one, we don't know whether this is correct. But another thing I want you to now pay attention to is all the deferred taxes they are deferring.
Yeah.
Now, they say they have a deferred income tax asset of 169. Here, something has happened. It has come to 163.750. For this is 169.8 million assets. There is something that is wrong in their tax computation. There is something is fundamentally wrong. And if you come as they have normally, maybe it's either that you have deferred tax asset or you have deferred tax liability. Either of the two. It's just like you dispose an asset. Even in your tax, it's either that you make provision for tax or you have a credit, either of the two. But this one, they are having deferred income tax as asset. They are also having deferred as liability. This is it. Long-term liability. Long-term liability. They are having deferred income tax of 10 million. So what is this one sitting down there? What is it doing? What happened? Why? Because why is it? What made it translate into long-term liability? So there are something that are not adding up. For them to even have this volume, look at it now, of this asset. There is something they are not doing right about their tax planning. That is what this can tell me as an accountant, as a tax man. Do you understand? As an associate of Chartered Institute of Taxation, with my knowledge of tax, there is something. I handle tax in my office. So there is something you are not doing right. There is something that is fundamentally not right about their tax. This is what all I could summarize here. There is something, because in this one, even in 2023, that you are having 169 million. Haba, Shebi, okay, look at liability now. This is just 10 million now. Look at long term, it's just 10 million. When I now come to asset, I'm now seeing 169 million. There's something you are not doing right. There is a problem with your tax planning. There is a problem with the tax management. There is a problem with the tax computation. So did you get where that is ringing from now? Because this is just about 3 million. So in 2024, it drops by only 3 million. 163.7 million. So what I could summarize here is that there is something fundamentally wrong. That is why on the face of your income statement, you are reporting a benefit. How come did you get to that level that you are having a credit? Because a benefit is like a credit. And a credit comes when you are probably overpaid. Or you use your withholding tax to offset your income tax. You now turn from something that's supposed to be minor, you now turn to positive. There's a problem. So because I understand what could turn a tax liability to a credit, that is why I know something is wrong. Because I know composition of a provision of a tax in the face of audited financial statement. So for it to now turn to benefits, there is something wrong. They are not telling us. There is something that is wrong with the tax computation. There is something that is wrong with the people managing this tax. So that is it. Do you get my point now? Hello?
Yes, sir.
So that is how to know. At mere looking, you don't need to compute anything. We don't need any computation. And that's why you saw it in that interpretation when we are looking at the strategic thing. That's why you are seeing it that way. That is just it. Something is wrong. Looking at those figures like that, there's something is wrong. So that is why we say that there is a volatile tax position. Okay. These people that they are already highly indebted, they say the cash flow is dwindling. This liability, this tax assets. So, kidding, what is it that has transpired that made them have a deferred tax asset of close to 169? I see what is going on. Is it that they are not doing their capital allowance very well? So, because what is bringing this thing is your depreciation. Government will disallow depreciation. They will give you capital allowance instead. So it is the timing difference between when you will claim when they will disallow your depreciation and give you capital allowance. It is the timing difference that is bringing about that deferred income tax. That is where it's coming from. the depreciation of your assets, they will disallow it and they will give you capital allowance. And if you have been computing your capital allowance correctly, because it is in the tax computation, they will consider your capital allowance. They will disallow the depreciation. So it is the timing difference between the two, because it is the same asset that you have depreciated that you will going to use to claim capital allowance on them.
Time.
So that is that. Thank you. So that's just the that's where that was coming from. Okay, so this is a strategic and practical recommendation. What are the strategic and practical recommendation? Now, why I put this there? This is 85. I will come back there. Look at this place. So it was because of what they said here that we should make sure that I'm coming. So they say make sure that your recommendation has a practical. That's why we are. Yes, I think it's in this place. Yes, this assessment. So this is it. This is it. Say to ensure your recommendations are both practical and strategic. After you have computed, you have assessed the operational and strategic business, give us your recommendation and make sure that they are practical and strategic. So what are the practical and strategic decisions? So that is 83. Was it 83? Are we in 83? Yes. So that's why we have for financial performance. For financial performance, this is more or less the interpretation of the strategic recommendation from the ratios you have computed. From the ratio you have computed, cost optimization, revenue diversification, receivable management, what they need to do, debt restructuring, what they need to do, risk management. So these are the recommendations from the ratio. That's why we call it financial performance improvement. Financial performance improvement. Financial performance improvement. Cost optimization, what they need to do. Revenue diversification, what they need to do. Receivable management, what they need to do. Debt restructuring, risk management. So that is that. Next one talks about the impact of the two proposals on financial risk. Impact of the two proposals on the financial risk. The proposal number one is about motor repairs and service center spare parts. So the impact on their financial risk, it will bring low risk, steady cash flow, improve liquidity, and short-term profit. Mitigation, moderate leverage, phase rollout with internal funding. So next one talks about local manufacturing, digital sales. This is the impact, this is the mitigation, and this is the conclusion. We move straight to strategic tax planning advice. What are the strategic planning advice we need to do? They need to leverage on investment incentives. That's number one. They need to leverage on investment incentive. They need to do their capital allowance. They need to maximize the claimable capital allowance for plant, machinery, and ICT assets to reduce taxable profit. That one is in accordance with CETA, CETA section 31 to 33. They need to carry out group restructuring and transfer pricing compliance. That's another one. Loss relief and deferred tax optimization in accordance with IAS 12. They need to carry out 2024 losses to offset future taxable profits. They need to proper deferred tax accounting. They need to carry out proper deferred tax accounting. Proper deferred tax accounting will enhance reported equity. withholding VAT and withholding efficiency. They need to automate their value-added tax return under the FIRS e-tax to avoid penalty, claim input VAT where applicable, environmental tax and ESG incentives. What they need to do, they need to position new ventures, especially the electric vehicles and hybrid vehicle, for green investment tax credits. That is that. What are the relevant international financial reporting standards you need to consider based on the information they have given us? You need to consider IS1, which is on the presentation of financial statement. IS2 is on inventory. Inventory is given. Critical. This one is critical for spare part valuation and cost control. That is what IS2 is concerned. IS7, statement of cash flow. This one is key to evaluate the liquidity and cash management efficiency. IS12, this is on income tax. This is for deferred tax and tax planning and carry forward loss. The treatment of the carry forward loss. You need to look at IS12 on income tax. You need to look at IS16, property, plant and equipment, for capitalization and depreciation of the manufacturing asset if they are going into that area of business. IFRS 9 on financial instrument, because they have a lot of huge receivable and other financial instruments. If you look at their financial, you will see marketable security. You will see marketable security, cash and cash equivalent. You see trade and other receivable. So they have all of these assets. That is why you will need to pay attention to IFRS 9 on financial instrument for managing receivable, expected credit losses. You need to look at that area. IFRS 15 on revenue contracts with customer. You need to pay attention. They can come from that angle too. Recognition of income across vehicle sales, repairs, and digital platform. They can ask. They can come from that angle. They can come from angle of IFRS 16 on leases. Importance for service center and equipment leasing, accounting. You need to pay attention in case they come from that angle. Then you need to pay attention to IFRS S1 and IFRS S2 on sustainability. ESG, long-term sustainability disclosure alignment. Pay attention. Folake Motor remains a strong brand with a valuable asset, but it faces profitability pressure and high leverage risk. Implementing motor repairs and part business will stabilize short-term cash flow. It will stabilize short-term cash flow. And why the local manufacturing and digital sales venture will ensure a long-term growth and sustainability. So that is that. So we are saying that a sound cost control, tax planning, and governance, a sound cost control, tax planning, and governance, that is, the company can achieve a financial resilience, competitiveness, and compliance in involving Nigerian automotive sector. So let's pay attention to that. Those are the IFRS in case they come from any aspect of that IFRS. Those are the possible IFRS. What are the ethical issues in this case study? What are the ethical issues? Number one, when we talk about lack of professional and independent objectivity, we talk about management or accounting officer, maybe. Don't let me read it. This information is there. This document will be shared. But you look at it from lack of professional and independence, creative accounting, doubtful accounting, unethical commercial practices. These are different areas. Inappropriate pressure to achieve reported results. So, management exerting pressure on accountant to achieve unrealistic profit target, breach of professional objectivity, and all of that. Just take note of that. Corporate social responsibility and social impact. You talk about the community relationship. What is the relationship of the organization with their immediate community? You look at that. You look at the employee welfare and fair labor practice. You look at the skill development negligence. You look at customer protection. You move straight to environmental impact and sustainability. You look at the environmental pollution. That is talking about inadequate disclosure of used engine oil, lubricant, and vehicle parts. That is where, when they are talking about sustainability reporting, you have to prepare this area. And what are the ethical concerns? What are the implications of the ethical concern? Carbon emission, reliance on imported vehicle with poor emission standard, contradiction with Nigerian commitment to Paris Climate Agreement and EDG. So you have to look at that. So just rushing, waste management and recycling, sustainability reporting, absence of sustainability disclosure or ESG reporting. It's a non-alignment with IFRS S1 and S2, GRI, that is Global Reporting Initiative, and Nigerian Exchange Sustainability Guideline. Pay attention to that area too. Regulatory oversight and compliance, tax compliance and transparency, adherence to IFRS and Ican guideline. That one is there. Governance and internal control, regulatory oversight and weakness. That one is there. Management versus, this one is looking at conflict of interest and stakeholders relation. These are the things you should look under that. So you talk about management versus shareholder, dealership versus consumer, suppliers versus procurement officer, board versus auditor. You look at that. Ethical framework and regulatory application. Look at ICANN Code of Ethics. You look at Companies and Allied Matter Act, CAMA 2020. And Nigerian Code of Corporate Governance. This is the area talking about governance. IFRS and IAS. IAS 15 we have mentioned it. Revenue from contract. IAS 2 inventory. IAS 16 property, plant and equipment. IFRS 7 and 9 on financial instruments and risk disclosure. Take notes, because if they have financial risk, IFRS 7 and IFRS 9 on financial instrument and risk disclosure. There are certain things when you see it in your question, you know that what if they come from this area, that we should tell them what are the disclosure of IFRS 7 and 9, that they talk about financial instrument. Pay attention. IFRS 37, IAS 37, provision, contingent liability. Pay attention. IFRS S1 and S2 on sustainability and climatic related disclosure. Pay attention. Environmental regulation, we have it. Tax legislation, Company Income Tax Act, Value Added Tax Act, Finance Act 2023 and 2024 for compliance and incentives. Pay attention. So these are the recommended ethical and governance intervention. Pay attention. We don't waste time on that. Conclusion. FOLAC motto's ethical landscape. It reflects strong business heritage, but imagine vulnerability from weak governance, financial pressure, and inadequate environmental and social control. To remain sustainable and competitive, the company must adopt a robust ethics and governance framework, embedded corporate sustainability principle, and align with the operations with IFRS, ICANN, and ESG standard. These are the objectives of the professional skepticism. We have already discussed it. I've already discussed this. I've already discussed all of this. I've discussed this absence of industrial. We have discussed this at the early, accurate and complete information. I've discussed all of this. I've discussed this is just a more detailed note for you to brush through and get yourself prepared. Whichever angle they come, you can tackle it. This is professional skeptical question for further inquiry that you can ask them in the area of authenticity of financial figure. Who prepare and approve the unaudited financial. What accounting framework was used? Is it IFRS? Is it NGAAP? Those are the questions you should ask. Nature of other losses. They just say other losses. What item constitutes 31.2 million loss in 2024? What are the items that constitute it? Is it a one-off impairment or foreign exchange loss or operational expenses misclassification? What actually constitutes the figure? Tax and regulation compliance. Have tax liability been reconciled with IFRS? Have they reconciled with IFRS? How come they are having that kind of huge deferred assets or state internal revenue? Any outstanding tax assessment or disputes? Do they have any tax disputes with either FIRS or state on tax and regulation, external auditor relationship, debt management and financing, operational scope, sustainability and ESG compliance? Does FOLAC produce sustainability report? Do they produce sustainability report, or do they comply with IFRS S1 and S2 on disclosure standard? Do they do that? Do they do that? Do we have information? Those are the questions. Operational scope. What is FOLAC market share? What is FOLAC market share by unit sales? How does it compare with top competitors in the industry? These are the questions that should be bubbling in our mind that will probe us to know what to write. How does the company mitigate environmental impact from its services center? How will they mitigate the environmental impact from their service center if they go into this business? How would they be able to mitigate it? These are the questions that we should ask. Recommendation and action that should be taken to strengthen the assurance and data integrity. These are the recommendations: independent verification, comparative and benchmarking, governance and transparency, data completeness, stakeholders engagement, auditor management resolution, use of technology for data validation. They need to use technology, ERP, for data validation. Professional skepticism summary. This is the summary of what we have discussed. Reliability of their data, completeness of information, comparability of evaluation feasibility, financial integrity risk, assurance level for decision making. These are these. So this is the conclusion of the professional skepticism of FOLAC. The unaudited, incomplete, and non-benchmark financial data of FOLAC Nigeria Limited calls for a heightened level of professional skepticism. Before relying on the case information for investment, for audit, and for strategic diversification decision, the following must occur: obtain an audited and independent verified financial statement, gather industry, competitors, and market share data, clarify unresolved audits and regulatory issue, conduct a forensic level review of the unusual item like other losses, debt servicing trend. These are the things they should do. Until these issues are addressed, any financial analysis or projected or projection, it remains indicative, not conclusive. It remains indicative, not conclusive. And a strategic recommendation should be framed with explicit caveats regarding data reliability. Regarding data reliability, there should be a caveat: bias beware, caveat emptor, bias beware. That in your recommendation, make sure that you put a disclaimer that before relying on this, make sure that there is reliability of data. So put it there. Frame it explicitly, the caveat regarding data reliability. That is that. Then we'll talk about the business proposal. We have already done this. This one, you may need. This one is talking about the cost structure of the project you want to do, all the thing. I've already discussed this. Capital cost, equipment tools, IT digital, how what is going to cost you. This one will be given to you in the exam. There's nothing to worry about. Revenue structure, I've already discussed it. Funding source, I've already discussed it. Forecast, sales forecast, how you need to forecast the figure, the volume that you are going to sales, you are going to sell, you understand, to break even, to make profit. This is it. The revenue you are projected, how are you going to, this one will most likely be given. Payback period, this is the payback period. Initial outlay, 450 million. Annual average cash flow, 425 million. Payback period, 1.1 year. And it goes like that. Project 2, that is on local vehicle assembly, digital sale and financial platform. It goes on. Number 1, talk about the total estimated project cost. I'm giving, this one will be given to you in the exam. No need to worry. No need to worry. Operational cost structure, it will be given to you in the exam. No need to worry. No need to worry. Cost structure of project 2, revenue structure, it will be given to you in the exam. No need to worry. Proposed source of finance. What is the proposed source of finance? Seeing that the company is highly geared, you talk about, you look at it from equity, shareholders, private investor, invite private investor, let them bring in money. They need to bring in about 35% contribution. That is 1.2 billion. They need to bring it if you are doing equity. Bank, or you should approach development bank. Development bank, they should bring 40%. That's 1.4 billion. You should approach government. Government Automotive Development Fund. You should apply for fund or grant. The fund should bring about 15%, 525 million. Technology partnership with foreign corporation, they should bring about 10%. That's 350 million. You should bring everything together to make up what the money you need, which is 3.5 billion, which is 3.5 billion to do the project. Sales forecast, it will be given to you in the exam. Payback period, it will be given to you. Strategic financial summary. This is the strategic financial summary for each business. 450 million, 705 million for the local, this one, for total capital, 3.5, for annual revenue, 3.2, and the net profit it will be giving you. This one will give you 53, this one will give you 32. This is the projection. Annual growth rate is at 10%. Payback period 1.1, 2.8. Within 3 years, this one will come back. Within 1.1, that is 1 year and 1 month. This one, it will come back. The money will come back. This is what you need to tell the investor so that they can give you the money. Level of risk. This one is low, is between low to medium risk. This one is between moderate to high risk. That's the level of risk involved in the business. Sustainability impact. What is the sustainability impact? Job creation, skill training, genuine part market, industrial development, technology transfer, imports, import substitution. Okay. Financial volatility commentary. This is this one. I need to stop here. I need to take a break here. I need to quickly join a meeting. And I want to say thank you to you all. If you can wait, you can wait. I need about 20 minutes break to just quickly join something. If you can wait, you can wait. This is the concluding part of this. And if you want to go, thank you very much. We meet again after.
We want to ask questions, but when you come back,
no problem. Please, if you can wait, you can wait. If you can't wait, please. Thank you. God bless you. Have a wonderful. I'll come back.
Can we have your number?
Contact the admin.
Okay.
They'll give me my number. Okay.
Please. Sir, are you coming? We should log in back in 20 minutes time.
I'm coming back. I just want to quickly join a meeting. But I don't want to keep people waiting. Anybody that wants to go, you are free to leave. If you can wait, please wait. I'm coming back.
Please, Mr. Tao, can we get this material? Will you drop this material with the admin?
Yes, this material is available. It's available with the admin. Admin, we can contact our admin. They will give it to you. I've already made it available to them.
Okay. And just briefly, just a second, please. Can you hear me?
I can hear you.
Please, like yesterday, in writing the report, you show us the cover page, the title, the disclaimer, comment, and you said all of them should be in one page before the executive summary. Like the cover page, is it necessary? Can you start from the title of the report? Is the
Yes,
cover page?
the cover page is not only necessary, it's compulsory.
Okay.
Yes, it's compulsory. The cover
Oh,
page is compulsory. You need to like do it.
Okay, okay. All right. Thank you, sir.
Praise. Hello, I'm back. Hello.
Welcome back, sir.
Hello, I'm back.
Hello, sir. Welcome back, sir. I can hear you.
Yes, thank you. Somebody wanted to ask a question. What was the question? Or the person has gone?
I think the person has left. The last question that was asked was about cover page, and you said it's compulsory.
Okay, yes. Cover page is compulsory. We need to write cover page. It's part of the requirement of the writing an external formal report. So it has to be there. It has to be there. Yes. So finally, this is the corporate governance report of Folake. Yes, this is the corporate governance review for the company. Yes, this is the corporate governance. This is to define what corporate governance represents, your relationship, the systems, and the processes that should be in place in case they come from this area. So you need to understand the principles of corporate governance, how it affects FOLAC mottos, the principle of accountability, the principle of transparency, the principle of integrity and ethical conduct, the principle of fairness and responsibility. Yes. These are the principle: independence, compliance, sustainability, and stakeholder engagement. I just want to make sure so we touch everything. This aspect is talking about the corporate governance issue, identify in relation to FOLAC motto, the corporate governance issues that have been identified in relation to the client business, FOLAC mottos. So these are the board composition. This is the board composition. The board, don't forget I said that the board of the board management and management team will be given to you in the exam. These are some of the things you should talk about if it is given to you. Talk about the board composition. Talk about the need for segregation of role. The need for segregation of role. Make sure you talk about it. Conflict of interest. Make sure you talk about it. Internal audit independence. Make sure you talk about it. Board committee. Make sure you talk about it. Ethical conduct and compliance. Make sure you talk about it. Financial transparency is also important. Make sure you talk about it. So these are the points that have been identified in relation to the client business. So make sure you talk about it. Succession planning is another one. There's succession planning. Make sure you talk about it. Succession planning. Make sure you talk about it. Stakeholder engagement and customer corporate social responsibility is another point. Make sure you talk about it. Risk management is another thing. Make sure you talk about risk management. Gender and diversity among the members of the board and the team. There must be gender and diversity. Make sure you also talk about it. And this aspect talks about implication of weak corporate governance. The implication of weak corporate governance, that is reputational damage, financial misreporting, regulatory penalties, operational inefficiency, strategic instability, reduced access to finance. So these are the points under the implication of having a weak corporate governance in a company, of having a weak corporate governance in an organization. So these are the points you can leverage on when you are explaining your corporate governance. One of the things you should talk about in the exam is corporate governance. Look at the management team and make sure you talk about the corporate governance. So reading through this thing will give you an idea of things that you can talk about when you see the unseen in the exam. That's why I put all of these things there to guide you. Board structure and oversight. Management and internal control. Yes, management and internal control. So yes, so these are the things. Financial transparency. These are the things you should talk about. So lastly is about going concern. The going concern. So the going concern of the company. I also put this there to guide you on the financial and business risk and the going concern of FOLAC motto. This information will also help you in is the situation the company is now. Is it that the going concern of the company, is it threatening? Is it not threatening? So I've put some information here that can help you in determining whether the going concern of the FOLAC client business is threatening. I look at revenue, net profit, total assets, total liability, equity, and current ratio. You see, we put this together, gearing ratio, put them together to be able to assess the business risk, the financial risk, and the going concern risk, of the FOLAC motto. So we talk about the profitability trend, we talk about the liquidity position of the company, we talk about the debt profile of the company, we talk about the operational efficiency of the company, we talk about external factors of the company and management plans. So this is for going concern. So it said based on the analysis, the company is currently a going concern as it remains operational, solvent, and asset-based. So FOLAC motto is currently a going concern because the going concern is not threatening. He said, however, material uncertainty exists. Material uncertainty, it exists in the company due to declining profitability, high leverage and weak liquidity, and also exposure to policy and economic volatility, These are the things that can threaten the going concern of the business. So conclusion, you say why there is no immediate evidence of suggesting that FOLAC motto will be unable to continue operation. The company's sustainability depends heavily on the effective financial restructuring, improved cash flow management, and successful implementation of its diversification strategy. So then here we look at financial risk assessment. We look at liquidity risk, we look at the leverage risk. This is this. And we also look at profitability risk, we look at credit risk, we look at foreign exchange risk and tax risk that the companies is facing. So this information will also help you. We also look at business risk assessment. So under business risk assessment, we look at the market risk. We look at operational risk. We look at strategic risk. We look at regulatory risk. We look at reputational risk. We look at environmental risk that are inherent in the company. And at the end of the day, we're able to look at strategic tax planning and compliance consideration. What do we think the company should do? We say the company should leverage on investment incentives, access to pioneer status incentives, and tax holiday under Nigerian Investment Promotion Commission, NIPC, for local assembly. The company should utilize capital allowance relief. The company should adopt optimal financing mix. The company should use thin capitalization rule to manage interest deduction eligibility. The company should consider equity financing to reduce the taxable interest expenses and gearing exposure. The company should consider looking at transfer pricing and related party compliance. The company should look at withholding value-added tax and withholding tax compliance. The company should look at sustainability reporting alignment, whether their business is aligned with sustainability reporting. So, and these are the key recommendations. These are the Summary of key recommendations we should make to management. They should strengthen liquidity. They should improve profitability. They should implement strong corporate governance. They should adopt risk management framework. They should engage in external auditors and engage external auditor. They should pursue tax optimization. They should pursue tax optimization with government. They should implement sustainability initiative. And finally, the overall, say based on the available data and trend analysis, Folac Nigeria Limited remains a going concern, but it faces a moderate to high financial and operational risk arising from leverage, liquidity constraint, and evolving industry pressure. So with effective governance, risk mitigation, and strategic diversification, the company can sustain operation, improve profitability, strengthen its market position within Nigerian rapidly evolving automotive industry. So, and lastly, we look at Pestel and Porter's 5 forces analysis. In case they come from this area, they test Pestel. Pestel, as we know, Pestel is a strategic management tool that is used to assess macro environmental factor that affect the organization performance, long-term sustainability. This Pestel analysis examines political, economic, social, technology, environmental, and legal dimensions. So that then we go ahead, we look at the factors. We look at the political factor. Things under political factor ranges from policy instability, government initiatives, public infrastructure development, political will for regulatory reform, and the strategic insight under political factor is that the company should engage with government agency to advocate for clear automotive policies and access to local assembly incentive. Talk about economic factor. Under economic factor, we look at sector contribution to GDP. We look at macroeconomic volatility. We look at access to finance, job creation, and value chain linkage. We look at strategic insight. What is the strategic insight? Is that they should develop partnership with financial institutions and leverage with Central Bank of Nigeria Intervention Fund, and BOI, Bank of Industry, for small and medium enterprise loan for expansion financing. They talk about social factor. Under the social factor, we talk about the urbanization and vehicle growth. We talk about the informal sector and dominant. We talk about the skill gap. And I will talk about the consumer awareness. The strategic insight under that is that they should invest in vocational training and certification program in partnership with automotive institutes and standard organization of Nigeria to build a workforce competence. And number 4, we look at the technological factor. Looking at the digitalization of service management. We look at emerging automotive technologies. We look at data and inventory management. And the strategic insights under technological factor is that they should invest in digital transformation using technology to streamline workshop operation and manage inventories and engage customer online. And number 5, we look at environmental factor. Under environmental factor, we look at waste and pollution management. We look at green automotive transition. We look at sustainability expectation. And the strategic insight under environmental factor is that they should adopt eco-friendly workshop practices such as waste recycling, energy efficient tools, that is positioning Folac motto as a sustainability conscious enterprise. Then lastly, we look at the legal factor, the legal factor. Under the legal factor, we look at the regulatory oversight. we look at lack of standardization, consumer protection law, intellectual property and brand protection. What are the strategic insights for the legal factors? They should advocate for policy reform and compliance clarity through industrial association. They should enforce use of certified spare parts and customer guarantee. These are the decisions that they need to take. And lastly, last but not the least, we look at the Porter's 5 forces analysis. In case I can come from this angle, we look at the Porter's 5 forces analysis. And this model, as we know, is evaluate the competitive dynamics of a business environment. And that is looking at it from the area of the motor repair and the service spare parts sector. And the factors we look at the threats of new entrants. The threat of the new entrants. We look at the bargaining power of the supplier, which is moderate. And the strategic response is that they should partner with certified OEM and local manufacturer. They should implement suppliers' quality audits and inventory standardization. We also look at bargaining power of customer, which is high. The bargaining power of customer, the risk is high. This one is high. And strategic response is to introduce tiered service pricing. Tiered means something that is in different category. Service pricing. They should look at loyalty program to do and warranties to build long-term customer retention. So we look at the industry rivalry. So in conclusion, we look at the overall strategic implication for Folak company. We look at the overall strategic implication. So this is the end. Under the strategic implication for Folak Motor, we say that the company should position as a sector leader. The company should position themselves as a sector leader by driving formalization and professionalism of the motor repair sector. Secondly, the company should leverage on diversification. The company should diversify into manufacturing, digital sales, and after-sales support. The company should invest in human capital. The company should invest in human capital, technical training, and certification to address Nigerian automotive skills gap. The company should pursue ESG and sustainability strategies. They should pursue that. The company should adopt digital innovation. Including service app, inventory automation, online booking payment system. Then finally, the company should strengthen its financial resilience. How? The company should strengthen its financial resilience through risk diversification, improve their liquidity management, and reduce import dependence. They should reduce the rate at which they import new and used vehicle. So that brings us to the end of this chapter. It brings us to the end of this preceding November 2025. So at this junction, I want to say thank you to all of you that waited behind to the end. I had to rush like that because I wanted us to touch base on everything that we have discussed. So thank you very much. All of you, I want to say thank you. Thank you, Rachel, for staying till the end. Ayo, thank you. Oseni, Omouni, Abada, Chuku, thank you all for joining. I don't know if you have any question you want to ask that I can quickly answer you. I want to say thank you, Lord. Abada Chukuka, thank you. Ayo, Ojekemi, thank you. Oseni Omouni, I saw you when you came in. Thank you for coming back. Rachel Oludoyi, thank you. our Starry Gold host, thank you. Starry Gold Academy, thank you. Stephen Umuna, thank you. Rachel, yes, please go ahead and ask your question.
Okay, sir. I just want to know, is this the format that is acceptable? The way your format is that how we are going to write it?
I did not get your question. The way my format.
Okay, the format of your what is it called? The suggested solution to the present, to the case study. The format you use, there are some like those ethical criticism and the rest that you have. You have the item, then the description, then the like, how will I put it now? But this format, I don't know how to ask the question, but what I'm trying to say is that when writing the exam, are we allowed to write the way we want, or is just this format that you presented that we must follow? Not the format I'm asking about is not about the cover page, the table of contents, the executive summary. It's not all that. Beyond
Okay.
that, there is all this ethical criticism that you are bringing out. There are some pages where you have like 4 items. There is no any particular line, but like 4 items on a sheet. That's what I'm saying.
Okay. So thank you for that question. Thank you very much. That was a wonderful question. So if you look at what I have done in this material, with remaining few days, I have put enough information that will be relevant, that you can be reading. Because to be sincere, most of the points we discuss here, if this is all you read and you know for the exam, and you are able to pour it down in the exam, there is no way you will fail. There is no way. So what we have done is that we have touched based on every area that Ican can come from. So we have looked at corporate governance. So starting from the table of content, yes, that is how it will. Starting from cover page, executive summary, that is the order. It has to be, it has to be, you understand? So where I've started deviating is the area of SWOT analysis. It may not be like that. They will ask you. Don't forget that whatever they will ask you, are you getting in the exam? Whatever you are writing is towards answering the requirement of the question. Towards answering the requirement of the question. And if God will help you, let it be that this area we have already identified, that is where the requirement will come from, so that you don't need to stress yourself. Just start writing. As many things you can remember, put it down. So another thing I have done here is that I have categorized them the way you should categorize your report. When you are talking on SWOT analysis, when you are talking on sustainability report, you should categorize what you are writing so that it will be clear that, oh, under this place, this is what I'm talking about. So in case they test PESTEL, because of something they have mentioned, we have treated PESTEL. In case they test corporate governance, we have touched based on most of the theoretical aspects they could come from. We also touch base on calculation. You can see all the calculation and interpretation to the calculation. Interpretation, because you need more of interpretation. When my ratio is showing this, what does it mean? That is what this material has come to introduce to you. When my figure is showing this, what does it mean? Look at that question that person asked. How will I know the task issue I'm supposed to discuss in this case study? I have identified it. And if you look at most of the things we have discussed, you see, we always refer to that back tax issue. Look at their withholding tax. Mention about their withholding tax. Because these are the things that as a corporate limited liability company, these are the taxes that we require of them from the tax authority that is regulating them. So let me answer your question back. You don't need to follow exactly the way I have put it down, but I have shared with you all the necessary points that you can discuss in the exam. I don't know if I've answered your question.
Yes, sir. Thank you.
Thank you. Ayo, I saw that you were raising your hand.
Yes, sir. Sir, thank you so much for your efforts. Since they are going to test ESG this diet, can you please tell us how they can coin the question out for the ESG questions?
Okay.
Thank
Thank
you.
you. Okay, thank you. So if I go back to the question now, nobody will ask you to write how do I put it? Nobody will say, oh, write sustainability report. You understand? Or divine sustainability report. Nobody will be asking that. You understand? They will just embedded it. You understand? In the requirement. Now, don't forget that when we started our lecture, I explained that what the examiner, what they are looking for, or investors, they are looking beyond company making profits. They are looking beyond profitability. They are looking at, do you have corporate social responsibility? Are you corporate? Are you socially responsible as an organization? Are you environmentally responsible? Are you responsible in terms of governance? That is where ESG has covered. I cannot categorically tell you this is exactly how the question will be coined. But one thing I know certainly is that they will ask about, expect you to talk about sustainability, not in form of a report, in form of whether the practice and operation of this company, does it comply with sustainability reporting? Does it comply with sustainability principle? And what are the things, if at all you want to mention, what are the things you should say? Or what are the things you should mention, you should watch out for? That is why we dealt seriously about sustainability. If you look at where we started talking about sustainability, oh, where did I start? Okay, this one is price model. I think, is it not this space? Ethical and governance, okay. Okay. Sorry.
I've been raising hand.
Oh, I'm coming. No, I want to finish answering AY. He asked a question. I was trying to ethical and ethical consideration. I'm coming. How did I put it? Let me see. Go to my table of content. Okay, I think it's on. These are the things here. Report on sustainability issue. So I put it reporting on sustainability issue. Now, 1 minute. So first thing is that one of the things that I know for certain that you must write whether this company, whether just like we normally treat ethical issue. because ethical issue now is now related to sustainability issue. Now, so in terms of, you must talk about how does this thing, are they, in terms of sustainability, are they even compliant? Are they compliant? The way they do their business and the proposal they want to do, is it complied with sustainability principles and issues? You know, things under sustainability. That's what I can, and we dealt with it seriously. If I cannot tell you categorically this is how it will be framed, but I know that it will be coined as part of the question. I'm trying to get that place in the material where we started discussing about sustainability. But if you look at, we discuss everything in terms of the governance, in terms of the environmental, we discuss it.
Page
Sir.
113.
Hello, sir.
113.
Look at page 94.
113.
Page 94.
94. Okay.
Yes, sir.
Thank you. 94. Okay, sustainability reporting. So this, we said this on page 94. Aha, this is good. So this is good. Where this, what was the starting point? Yes, ethical and so I think this was where, yes, this was when we say that recommendation for ethical governance intervention. You know, we look at all of these: financial reporting, ethics, corporate governance, community relationship, environmental responsibility. These are the key words. Are they environmentally responsible? That is all that sustainability is looking on. Because for you to continue in business, you must be in tune with your environment, your business environment, especially the immediate environment that you are operating. You understand? So that's why environmental, we talk about the social conflict of interest. So this is sustainability and reporting. We said develop a sustainability policy and annual ESG reporting in line with global reporting initiative and Nigerian stock exchange. So these are the things we discuss, and many more things. I think I still remember, it's not in only this area, but at least it was more mentioned in this aspect of the report. So, but what I've done is to make sure that I've provided enough information that even if any question come from the area of sustainability, you have enough thing to study and you have enough points to draw from this material that is enough to make you pass your paper. So let me take another question. I don't know if I've been able to answer your question.
Thank you, sir.
If I was, yeah.
Thank you, sir.
Who else was raising hand? I think someone else was raising hand. Yes, Gift. Please go ahead, ask your question. Gift, go ahead, ask your question. Gift, I saw, is Gift there? Gift, go ahead, yes, ask your question. Can Gift hear us? Gift, can you hear us?
Yeah. Yes, sir.
Okay, go ahead, ask your question.
Okay, so I wanted to ask, in the area of further professional skepticism, assuming we want to talk about it, can we raise a rhetorical question like you put it without answering it, or are we supposed to? I'm talking in respect of page 98. Can we just
I did not get your question.
what we are critiquing?
I didn't get your question.
The examiner and give it that way, or do we just state it?
Your line was breaking. No, I didn't get your question. Your line was breaking. I didn't get your question.
Okay. Can you hear me now, sir?
Yes, it's better now. It's better now.
Okay, can you hear me now, sir?
It's better now. It's better now.
Okay. I was asking in the okay. I was asking in the area of professional skeptical questions. Can we ask the examiners such rhetorical question for them to answer it themselves? Or
No,
should we state
no,
what we observe?
no, 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 no. I just put that to sprouse to arouse your questioning mind. You understand? So if at all you want to, not that you cannot ask a question in your writing, but you get the way that you are going to put it. Are you getting it? You get the way you are going to put it. It's just like when somebody writes an exclamation. So you are trying to make a point that, oh, we don't even know how, So for me, no, I would say no. You can't use it that way. I just put all of that to make you understand some of the things we have said, the question that brought them up. That was why. But in exam, I will not advise that you should be asking, oh, this, no. Just make your point. You don't need to ask question. Just make your point. Yes. You don't need to
Okay,
put
sir.
it in a
Thank you.
question where just make your point. Yes. Yes. Okay. Anu Oluwapo, you wanted to ask a question. You raise your hand. Please go ahead. Anu, can you hear me?
Yes, sir. Good evening, sir.
Good evening.
Yes, sir. I want to ask concerning the professional skepticism and the ethical considerations. I know that it's doing the executive summary that we would have to state the professional skepticism, and doing maybe answering of the requirements we can, or doing the conclusion or recommendation of part of the requirements, we have to state the or point out the ethical considerations. But in the table of contents you showed us, I saw that before the appendix, there was professional skepticism and ethical consideration before that. Is it that we have to specifically put an heading, like state it in a separate page?
No,
Okay,
no,
sir.
you cannot do that.
Okay, sir.
Yes, no, you can't put it like that.
All
Me,
right,
I
sir.
put it in this material to let you know the thing I've put together. You understand?
Yes, sir.
That's but in the exam, no, you can't have a heading called professional skepticism. No.
Okay, sir. What about the introduction, sir?
Yeah, introduction is normal. Yeah, you should have introduction.
Hello, sir.
That one is normal.
What
Hello,
about
can you
the
hear me?
introduction?
I said yes, introduction is normal. It's accepted.
Yes, sir. Okay, okay, sir. Hello,
Introduction
sir.
is normal.
Okay, sir.
Hello,
Thank
go
you.
ahead. Yes.
Hello, sir. Concerning the
Yes, go
introduction,
ahead.
I've had a question in respect of it, and you said you are going to come up with something for us there, because you are saying that we should times of the report, objective scope, and that you are going to bring out some points for us that we'll be able to know what we are going to write on that.
Right. Okay, under introduction.
Yeah.
Okay. I forgot I said that, but okay, no problem. Okay, let me see. Okay, I think I'll have to come up with something. Yeah,
Yes,
I have to come up.
that's
Uh,
number one question.
okay.
Hello. Sir, concerning the table of contents, what was here? So the next one is SWOT analysis. I thought we are going to prepare the appendix somewhere and we are going to write a report on it. Under financial performance, I mean. Can we going to maybe leave a space, go and prepare our financial performance and come back and begin to, or we are going to do it the way you did it on this write-up for us?
Okay. Thank you very much. Thank you very much. Let me explain.
Okay,
You
sir.
see, in the exam, the format of this report is that you start with after your table of contents, you will have your cover page. After your cover page, you have your summary. Now, after your executive summary, the next thing is introduction. When you put your introduction, immediately you start introduction, don't forget, under your introduction, you are going to introduce what you want to discuss, because you can only have only one introduction in the entire report. You can only have only one introduction. So your introduction is like a preamble to what you want to discuss. Okay, so that is like a preamble to what you want to discuss, and it will cover both what you want to discuss in requirement 1 and requirement 2. That is it. That's what introduction is about. It's just about that. Immediately after that is to now go to your key findings. So inside your key finding, let's say for example, this is it. Let's start with requirement 1. Requirement 1 will be based on assessment of the financial performance of the client. So immediately after your introduction, so it's your introduction that you may be that, oh, this report is to this report is to carry out an assessment of the financial performance of Folak Motor and the evaluation of the 2 business proposal, full stop. Don't let it be more than that, because there is no marking much into introduction. Now you go straight to your assessment of the financial performance. You will have gone to compute your ratios in appendix. It is inside your main report. When you say assessment of financial performance, you will now come. 1, you start with profitability. You will list your ratio. You will explain it. So you list profitability ratio. You will explain it. You list liquidity, and you list another one. You talk about them. Do you understand? So that is the way it will follow for requirement 1. And you after you have stated your key finding, because you have computed your ratio, you are just coming under your key finding. Is under key finding, you are talking about the analysis of your financial performance. What did you discover? So you are what are the key findings you got? So you got that, oh, they are highly geared, they are this, they have this liquidity ratio is more than some of the things we said when we're doing where did we do it to. That's where you will state all of that. Was it I saw it. Let me show you quickly. So that is what you are going to do under So that's what you are going to do under requirement 1. You talk about your financial performance, you talk about them.
Page 79.
Is what?
Page 79.
Thank you, 79. ZA. Is it 79? No, it was a page where I discuss the business and financial risk. That's what I'm looking for, not this one. That place where I discuss business and financial risk. Business and financial risk. That's the place I'm looking for. So I just want to use that example to discuss. You know, I like the way they put it there. They listed all the ratio and they started telling us that place where I discuss the analysis of the business and financial risk. That's where I'm looking for. So that's a typical, okay, going concern. This place. Look at exactly what we did there. So this is it. key financial indicator. Can you see now? Revenue. Oh, we started talking about what's the observation. Revenue increased by 5%. It's showing modest income. So you are talking about, oh, when they talk about financial ratio, look at it. Look at this place where they talk about current ratio. Let me see whether you are seeing my screen. Look at this when they are talking about current. Can you see how they stated the ratio? In your main report, this is how you will now be writing. You are stating that, oh, this one for 2024 is this, for 2020 is this. You are, okay, what does it mean? Liquidity is tightening, indicating this is what is indicating. So after
page,
you have said,
which page?
Hello.
Which page? Tell me the page.
I'm on page. Presently, I'm on page 114. Page 114.
Okay.
Page 114.
Okay. Thank you, sir.
So if you look at, this is the way you will now put it. Because now you are not telling story. This computation, you have already done it in your appendix. You are only bringing key financial indicator here. And you are telling us what is it about? What is the information you are drawing, putting the figure. This one, you don't even need to write it in full. This one now is in billion, 2.7 billion. That's how you should write it. 2.8. You don't need to write the entire figure. Look at it. Net profit. They are bringing the profit of 2023. They are benchmarking it with the loss of 3.640. And they are telling us that profitability reversed into a loss. Look at the figure. You can see how the figure is showing. You know, this is a clear report. Are you getting me? This is a clear report. You are showing us that, look, in 2023, profit was 43.29, and immediately in 2024, it reversed to 3.6 net loss, showing that profitability reversed into a loss, which indicates cost pressure. Because it is only when the cost of sales is more than the revenue, it will turn the gross profit to gross loss.
Okay.
This is how the body of, when you are talking about the financial, this one. So after you now talk about this, all the key things you want to talk about, you now go to what are the conclusions you are now drawing from this. What is the conclusion? After you have said what are the conclusions you are now drawing, and you now make recommendation. So that's why if you go to this page, that's why after look at the same thing when they talk about assessment of the this one, we're even assessing. That's why I say we have put enough information. You can borrow this one. Look at how they are interpreting this thing. Look at where we are talking about the implication of each one. When we say that liquidity position, current ratio is below, is 1.2 to 1, and trade receivable and inventory tied up significant cash. Trade receivable and inventory tied up a significant cash. What is the implication? The company may face cash flow difficulties. You are already drawing conclusion. This implication is that you are drawing conclusion. These are the conclusion of the implication of the ratios. These are the conclusion you are looking for. These are the conclusion.
Okay, sir.
When they have debt profile, long-term debt, it rose from 1.03 billion. It rose by 36%. And that is 36% of the total asset of the company. It means that the conclusion is that the company has high interest burden. The company has high interest burden, and they are vulnerable. They have vulnerability to interest rate increases. Because that is what happens when you are on facility. Once you are defaulting, your interest rates will increase. These are the conclusions you need to take. These are the conclusion of each of the ratio, even the operating efficiency ratio that we computed. These are the conclusion you will draw from it. It shows inefficiency in cost management. It shows inefficiency in cost management, and that if that continues, it put pressure on profitability. These are the conclusion of all of the. Look at gearing ratio. The gearing ratio, debt to equity. We put the figure. This is how it will be in the body of the report. of the main report is the figure you are bringing now. Side by side, you are bringing the ratio result. You are benchmarking it side by side to say, okay, this figure and this figure. So it is very clear. You use your ruler to rule your book. Put gearing, put it yes, so, yes, so. What is the implication? What does it mean? You are putting the implication beside. This figure for this one to show 5.38 to ratio 1, and this one to show 5.36 to ratio 1. It means that the company is highly geared. If the company is highly geared, it shows financial structure is heavily debt dependent. It shows that the company is heavily debt dependent. Debt is 5.38. Equity is 1. These are the conclusions you are drawing. And that is why at the end of it, you will see when we are making recommendation. Look at it. Look at recommendation here. Look at this. This is where we talk about financial risk and assessment. These are the things. Look at the recommendation. What should they now do? What are your recommendations? Implement aggressive receivable collection policy. That's the recommendation. Your recommendation should be in bullet points. Should be in bullet points. After you have discovered, you have drawn your conclusion. What is the way forward? This is the recommendation you need to draw from. Maintain a minimum liquidity buffer. Exploit short-term overdraft and trade credit facility. So most of the ratio, the recommendations are here. Look at profitability. They need to tighten cost control, especially the selling and administrative expenses. They need to increase margin via value added after service sales. So the margin, all the thing. Look at under task risk. Look at what we recommended. Recommendation is that they should conduct tax health check. They should do reconciliation with Federal Inland Revenue. Why are they having that huge number of deferred income tax? Have they done reconciliation with FRS? Are they sure that the tax computations are correct? They should implement a strategic tax planning under the CETA, value added tax and withholding tax law. So after you have done this, you draw your conclusion and you make your recommendation. You understand? So when you draw your conclusion, if you want to still now state your, maybe before you draw your conclusion, you want to state if you have ethical issue that you want to discuss. So most of the ethical issue we have mentioned it. You can still mention your ethical issue. Do you understand? So it's just that order. It's just that order. So most of the points you need to look at it. This is a summary of key recommendation. Summary of key recommendation. You can draw from all of these recommendations. You need to strengthen liquidity, improve profitability. How? Through cost optimization and diversification into higher margin services. They need to diversify into higher margin services. If income does not increase and cost is increasing, you will get negative gross margin. Because cost is increasing, revenue is not increasing. It will be loss, it will be deficit. So they need to diversify into services that will bring in more income. Because some of the expenses may be uncontrollable expenses. That is, expenses that they don't have cost, they don't have control over it. Payment of salary, repair of generator. They may not have control over the expenses. Payment of taxes, payment of payee. Some of them might be some regulatory payments that you don't have choice. You have to pay it. So if they are that type of expenses, then you need to increase revenue. You need to do something to bring in more money because you need money to run the office. I don't know if that point is clear. Okay, is anybody raising hand? Okay, no hands raised up. So I want to say thank you to you all. I want to say thank you to you all. Thank you, thank you, thank you. Thank you, all of you, for staying behind. So I wish you best of luck in your exam. Thank you very much for being with us from the beginning of the diet to up to this moment. Thank you very much. Please try as much as possible, make yourself, avail yourself this material, speak to our admin, get access to this material, study it. Study it. Most of the things you will need to write in the exam are there. They are there. Most of the things you need to talk about. You see, passing the exam is for you to have an idea of what to write, something you need to write about. That's all. So that's all. Once you have an idea of what to write, keep writing. Anything that comes to your mind, put it down. Anything that comes to your mind that is relevant to the question, put it down. You don't know what you write, that you just fetch you additional mark that will make you cross the pass mark. So that's what I would say. So thank you very much. Thank you. I cannot thank you enough for staying behind, and you can see that we are improving on our material every diet, trying to give you the best. That was why we went ahead to profile how will this question come, what are the likely questions they will ask you in the exam, just to much more prepare you adequately for the exam and give you more than enough information that you will need in case they come from area of SWOT, area of pastel, area of five courses. Based on the information we have seen in the question, we came up with all of these things, and so that you have enough information to study. So this is not the time to go and be reading one funny textbook. You should be reading how do I answer the question, every possible question that can come from this precinct. How do I answer it in the exam? That should be your primary target now. And we have tried to cover all of that as much as possible in this material. So if you ask me, this is the type of material you should be reading. You should be trying to say, how will I be able to replicate all this answer in the exam? So that's what I would think if I were the one. That's how I will approach it. Imagine you were able to replicate 75% of this material in the exam. Come on. So it's going to be wonderful. So with the additional information they are going to be provided, So thank you very much. God bless you. I'm going to let you go now so that I can rest. I know most of us, including myself, we still need to go to work tomorrow. So thank you very much. Some people are on leave already, reading for their exam. So thank you all. Thank you all. Thank you very much. I want to appreciate all of you once again. Thank you for joining. Ano Luapo, thank you. Ayo Jekemi, thank you. Gift, thank you. Idris Omonayajo, okay, thank you. Olushola Sholares, thank you. Oniwurola, thank you very much. Oseni Omomi, thank you. Rachel, you are wonderful. Thank you, everyone. So bye for now. Success all the way in the name of Jesus. Thank you very much. Have a wonderful night rest. Bye, everyone.
You, sir.
Thank you.
Good night, sir.
Good night, everyone. Thank you. Bless you.